Traders, stop stressing over the S&P 500. Get structured daily outlooks, levels, and actionable setups for ES futures, delivered before the market opens. Plus weekly insights on crypto, stocks, and commodities. Subscribe today on Substack. Conquer the markets.
What's up, everybody? Happy Sunday. It is November 2nd. It's been a lazy weekend. I hope everybody's had a wonderful one. We had a killer week last week. The trade plans were absolutely on point, and we had a lot of fun doing the post-market breakdowns. I'm starting to do post-market breakdowns Monday through Thursday at 5 p.m. Join me. It's only a half hour. We go over the trade plan. We go over ES. We talk about what to look for the next day potentially, and some crypto and stock if it's on the radar. So first, I want to just tell you right now, for a limited time, I am giving away 30 days free to the Substack. If you haven't subscribed already, or you're not a current subscriber, you are eligible. Please check out the link in the description and sign up. It's free. It doesn't cost you a thing. You put your email in there. I'll turn you on. You're good to go. Check it out for a month. Make some money. It's spot on. And so with that being said, let's move on to the next topic here. As you guys know, I usually start with the weekly TPO, and we will get right into that. But first, let's talk about SPX. I just want to touch on this real fast. I'll go ahead and get rid of my ugly mug here. The reason that I'm bringing this up is because SPX and ES look identical structure-wise. I have a lot of SPX traders in the room, and most of us actually trade ES as well. And so I wanted to point a few things out to you guys. We have this all-time high daily top down at 67.60. We've got these two weeklies at 67.33 and 67.15. And then of course we have our main week daily leg up at 66.88. It's right here. This is the leg up. You can see it on the 4 hour. It's also an untested 4 hour. 66.88, people. This is good stuff, okay? But just to show you here, we have a ton of support in this general vicinity. It's basically a 50-point range of just nothing but massive support. To kind of get a little bit more granular here, you can see we have the top down daily at 67.60 and a 4 hour at 67.48. Little 10-12 point range in there that looks like a ton of support. One of the main reasons why I like this top down is because it actually got a smack here that sent us down considerably. Looks like damn near almost 200 points. And so you can't ignore levels like this. And we'll get into this with ES, and I'll show you the actionable setup and what that entails, okay? But we do have a ton of support underneath that, as I showed you, and then of course the daily leg here. Now, if they do in fact fail this daily leg, we do have the 66.29 daily and 4 hour. This is the inception of the move up, but you know, I'm not so certain that'll happen, but it is there, and that is the equivalent of 66.60 on ES. Okay, so just wanted to point that out to you guys. The next thing I wanted to show you, actually, let me just show you this. Let me pull this over. So as you can see what I was saying, structurally they look identical. You know, this is the all-time high top down, same thing here. You've got these two weeklies at 88 and 61. Over here it's 73 and 715. I'm sorry, 733 and 715. And then of course our daily leg up at 67.38 is 66.88 on SPX. And then this is that area I was telling you, the 66.60. That's 66.30 or 66.29 on SPX. So I just wanted to let you guys see what I was seeing as far as being almost identical as far as structural comparison here and how things look. So for those of you guys who trade with me, you know I monitor all this because SPX is the OG, but I do trade ES, and so I think it's important to have context on both of these, okay? Also, let's bring this over before we forget, okay? So VIX. People say you can't do technical analysis on VIX. You tell them to get the hell out of the way, because you and I both know we use this every day. This is in the trade plans. It plays so freaking good, it's ridiculous. And so with that being said, we have had major up moves above the 16-17 weekly. This has been a major pivot for us. And the overhead resistance has been the monthly at 17.35. As you can see, we've bumped our head multiple times and have failed due to this massive monthly. But on Friday we pushed up and we pushed above the 1692, and ultimately once they got above the 1735, they really pushed the ES down something pretty nice. And then ultimately what happened was we triggered a failed breakdown at the end of the day, which was a sweep of the low to grab liquidity after the gap fill, and then this thing came back down. So now the real important part here, and I'm just going to show you what the key point of this conversation is 1735 is our main pivot for up or down. Okay, we know that. We've talked about that for a couple of weeks now. But we have this untested daily at 1692. There's a 4-hour at 91. You can see the daily here, right here. Okay, and if we move above or below this, this is going to be critical. So this is untested on the first touch for top down. If they play this and pop back up against 1735, this technically could send the indices back down a little farther and maybe fill our real gaps below that we talked about on SPX. Okay. However, if this area fails and we come back down here, we're going to, we'll get a lot of relief on the indices underneath 1735 and especially underneath 1692. Ultimately, above the or below the 1617, the ES is really bullish, and SPX, and VIX would be really weak. So we're going to watch for above or below 1735 and really the 1692. Is that going to play or not? That is the question of all questions. So we will see what happens come Monday or Tuesday. Not sure when we're going to get in that pocket, but we will soon find out. So let's go ahead and bring over the weekly TPO. As you guys know, it's my jam. This thing continues to prove fruitful all the time, telling us what we're looking like in value here. Okay, as we've talked about before, and we've done this twice now, we continue to balance back and forth for 6-7 weeks, and then ultimately once value is accepted, we push higher, which we've done. Okay, so we've set up here all week. We hit the top of our extension at 69.50. We had a bullish imbalance that basically filled almost to the tick, and that was the high of the week, and that was also the weekly expected range. And so it was perfect. The plan was absolutely perfect. And so with that being said, now what are we going to do? Well, we went higher and then we've came down. We've already filled this gap here. Okay, so below us you can see we have another gap. It runs between 68.11 and 60, what does that say, 67.80, I think, 67.90, excuse me. And what I wanted to point out to you was a couple really important levels inside here. Okay, one is the October 5th weekly point of control, 67.92. 2, the October 19th weekly value area high, okay, 67.86. And 3, our naked point of control from October 19th at 67.76. This area is littered with support, okay? And when I'm just going to show you real fast, I'm going to kind of bring this in a little bit and pull this over so that you can see. Boom. Okay. Check this out. 67.92. Well, we have a big weekly at 67.8850. We have these weekly value area high at 67.86. Basically the same thing as 67.8850, right? Super close. And then we have the naked point of control for 1019 at 67.76, which runs really close to our daily here at 67.74. So even from a TPO perspective, after we fill the gap, we have a lot of very important levels here that coincide with the levels that we get derived from our process. Okay, so that is really important for you to keep note of. Okay, the other thing, and I'm going to show you when we bring over the 4-hour, is when we start talking about can we move higher, we're going to keep in tabs on the weekly value area high from last week and the previous weekly value area. The previous weekly POC. Okay, so we'll talk about this here very shortly. Don't forget about that. All right, so let's go ahead and bring this over here so we can see what's up. So here's our daily, okay, guys, and we talked about it real briefly when we had the SPX up, but we have this all-time high leg down at 68.05. I like it, and we're actually going to talk about an actionable setup real soon when I bring the 4-hour over. We've got a weekly at 67.88. That's our leg tip. Okay, and we have the leg down, which smacked really hard right here a couple times, 67.61. Okay, we got to keep all these high time frame levels in mind. The other one that we have the daily is at 67.74. This is not my favorite. That's why I have watch on there. It's slightly contained. I'm not in love with it, but I don't want to ignore it either. So I definitely want to keep it on here. But, I love all this. And I don't know if we're going to get here, but this is a banger right here. 67.38, okay? It also, just to show you guys, it is also extremely close to the 1019 weekly value area low at 67.31.75, or call it 67.32, whatever. It's like, 5 points away or 6 points away from this daily leg up, which I think is great. Okay, so to me this is like super juicy. And when we get down into a lower time frame, I'll show you. We also have it's the leg up on not only the RTH daily but the ETH daily, and it's just a really sweet spot. We got a 4 hour there, and we got that weekly value area low. Now again, like we said, and when I had the SPX up, if they fail to come down here, I don't have any more support until 66.60. Okay, so something to keep in mind for sure. All right. And now let's go ahead, that kind of sums it up for the daily. Let's go ahead and bring over the 4 hour, and then let's talk about, are we going to get more up? What's the deal? And I think it's an important question that everybody's been kind of asking here, okay? So can we go up from right here? Well, yeah, we can, but I don't think we will. I really think they need to come down first, but we have a few key levels here that we're going to watch just to find out which direction we're going to go, okay? So just like I told you guys, I'm going to bring this over again so that you can see this. Here's the 4 hour. Let me cover this up so it's a little bit more organized here. So here you go. So here's the 4 hour. Our main area that we smacked was our 69.18 from our plan on Friday. This was a big 4 hour. It is also the previous weekly value area high up here. So if we are able to get back above this is our main back above, okay? If we get above this, we can make new all-time highs, 69.18. Everything else is tested, including this daily at the highs, all right? But we have one stumbling block in between that. We have an untested 4 hour at 69.05.75, which I do believe could play, okay? And the way I would be looking for this to work is if they come up here and they play 69.05, I want to see continuation back below 6,900, and then ultimately below 68.93, and I think this thing could come down pretty good. Okay, and again, we never know what's going to happen, but that's what I can see so far. Right now, we've been coming down, and we can't make higher highs. We're continuing to lose support on the 4 hour time frame, and it looks to me like we've got some weakness, and we could kind of drift a little lower into the 69.05 area at least. Now, I will say this, the 68.55 is untested. It is also a 1 hour level. The 1 hour it is losing, but it didn't lose on Friday. And this is actually an interesting note that I want to show you guys, and I will show you here momentarily. But this 4 hour, 1 hour at 68.55 is technically untested. They could come down, they could play this, drift back up, and then we could see what happens at 69.05. If they smack it, we come down. If they come back up, we got to deal with 69.18, which is absolutely tested, but above that, we continue to drift higher. But really, 69.05 is our only untested level to deal with for above or below, and then once we get below yesterday's POC, we've got something. Now, you guys see these arrows here, right? So that's what I wanted to show you guys. This was from our trade plan on Friday. This was a phenomenal setup. We had the gap fill reclaim. They came down, they filled the gap. We had a put wall at 37 and one at 47. We said look for this area to play and then reclaim yesterday's low at 51, all right, as per the transcript, and then ultimately get back above 55 for confirmation. Well, I would say they did that, ladies and gentlemen, back above 55. 55 went all the way to 6,900, right? So we're talking about a 50-point squeeze on that reclaim. Almost no heat on that whatsoever once they actually got traction from the lows. As you can see, sweep the low, get back up, and it just squeezed all afternoon. This was a great trade from the trade plan. So congratulations to everyone who was able to take advantage of that. That was a super sweet setup, okay? So I just wanted to show you guys this area right here that I thought may be able to hold, may be able to take us back up to test something, but I do feel like we still have some weakness in this market. And not really weakness per se. I mean, I honestly believe this is what happens. And I just posted something in Twitter not too long ago For those of you guys who follow me on Twitter, you probably saw this. This is truly what I believe will more than likely happen. I think we come down in here, we test some of this important stuff, and we just drift higher. Right now, we have lots of reasons to believe that this is a possibility. We have not only the Golden Cross that happened in August, but we also have the statistics that show us, what happens when Feds cut rates at the all-time highs. I just put out a Substack post on that last week. If you haven't read it, check it out. I'll put a link for it in the description here. That is my most read post so far. I'm very proud of that. It's probably got 4 times as many views as every other post I have. But ultimately, what the outcome is we can expect approximately another 20% up move 1 year after they cut rates. And so they just cut rates, I don't know, a couple days ago. So we have approximately another 20% higher, which, just based on this, 68 times 2, what are we talking? Another 130, 140 points. So, we're talking about 60, 70, what is that? About $8,000. So pretty high up there. So, we'll see what happens, but right now we have no reason to be bearish other than just temporary weakness in the market. So if this area right here, just looking at this from, all perspectives, you can see that we have the previous weekly value area low right here, and ultimately, the previous weekly value area high and the POC. So we talked about how if 05 plays, we get back below 93, which was these wicks, we come down, and then really below the previous weekly value area low, especially if this 55 either doesn't play or has already played and comes back down. Let's just say it plays and comes back down. We're going to have extreme weakness here, okay? And then we start to come into this gap fill area. Now, let's talk about that actionable setup that I was kind of giving to you guys, and then we'll just wrap this up, all right? So I like this trade right here. There is the all-time high at 68.05. I talked about it with SPX just a little bit ago. This thing got a monster smack, played for like 200 points, all right? Just a beast of a move, all right? So at least when you don't want to ignore a level like this when we come back to it. However, because we have this large gap here, I would be a little cautious about just resting orders here. So what I would be looking for is 68.05.50 to play, get back above the previous all-time high at 68.12, and then look for continuation there up into essentially 55, 64, 74, and see how high we could take it. That's how I would play that area, okay? Below that, we have this epic weekly here that you can see played so many times, all right? Just so many times at 67.88.50. We've got that October 5th's point of control at 92. And then we've also got 1019's weekly value area high, all in the same area. And then it fills the gap. This is a great spot. This is a really good spot. And I like it a lot. And, really we're going to want to see this play and really get back above 05 and then 12. But I think this has got a lot of promise here. We've got a lot of stuff to look at here as far as structure. And so certainly wouldn't turn a blind eye to that one. Now we've got this 67.74 directly below that. That lines up with that naked POC I told you at 76. And I like this level. No, that's not true. I'm not sure if I like it. It's contained. I put watch on here. I'm not in love with it. But I do like the fact that the monthly VWAP is here at 67.67. We have the 20-day moving average. We have the POC. There's a lot of reasons to like it, but really I think I'll have to wait until it gets back above 67.88.50 before buying this. It's 14 points. Yes, it's a lot, but if we can get above it and then pull back into it, that probably presents a much safer buying opportunity, okay? Now, below that, we have the other weekly at 61, and it's also located right here around this monthly VWAP area. I would want to see this play, get back above 66 and ultimately 74 before engaging, and then above 88, etc. But looking at this main spot, I know you guys can see this monster leg up. This is that daily leg that I was telling you about. This is 67.36, 67.38, 4-hour daily, ETH daily, previous weekly value area low. This is the jam. I love this spot. You're really going to want to see this spot get above 45 before you can assume that it's going to hold. If you get above 45 here, you can pretty much look to take targets around 61, which is another 15, 16 points. I think this is a phenomenal trade, and I do think that if this area holds, we will continue to climb this stuff and move up. But the reason why I say you got to take profits around here is you guys can clearly see this area got a lot of reactions many times over, and so we don't guess, right? We let it play. We take most of our money here. Once they start to reclaim, then we can add back in our trade, and that is how I feel about that. And the last little spot that I'll point out to you guys is if this fails, I don't have anything until we come down into 66.60. 66.60 is the last area I have. And the way I would play this, and it's down here with the 50-day, which is super sexy. I wait for 66.60 to play and get back above 64. We've played both of these dailies multiple times, guys, where we use these, say, okay, if this plays, we wait for this to play and get back above the other one, and we continue to keep doing it over and over again. And that's exactly how we're going to play it this time. You would take some profits around 90 and then look to get the rest up around 36. Okay, so that is what I got for you. We're going to stop there because that is like 100, that's almost 220 points lower, with this being, the juicy spot, like 100 and, I don't know, what is that, 150 points lower, 130 points lower. So I don't think there's any reason to go any lower than that. That basically sums it up for everybody and kind of gives you guys an idea of what we should be looking at. So, I appreciate you guys tuning in with me today. Do not forget to sign up for the Substack. It's free for 30 days. If you're not a subscriber, you can't afford not to. This is for a one-time deal. It's on a limited time offer, and if you're not a subscriber, sign up. I'll put the link in the description, and make sure you do it. 30 days is nice, and it's a banger. So look forward to seeing everybody on Monday for the post-market breakdown, and for subscribers, I will send a plan out to you on Tuesday morning. So see you guys soon, and cheers. Have a great Sunday. I'm going to get ice cream.